This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
I just wanted to say, Jason, I've been following you for a long time. 10 years ago is when I first saw your course. And I'm telling you, the way that things have played out are way better than you projected for me personally. Obviously, it's been, a good 6 years, but now I'm ready to kick it into high gear as, I want to really build a portfolio that's, 4 or 5 times what I have already. Obviously, your advice has been fantastic. It's been life-changing for me.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1882, and listeners from around the world, thank you for joining us. So we have the big talk of the town. We're not going to go into it too deeply today, but everybody's talking about the Inflation Reduction Act. Oh, that's so funny. That ought to be a joke on its face, because it is. I don't know how these politicians think that they can defy economic gravity with magic. I mean, it would be magic, literally, to think that you could reduce inflation, yes, by spending more money. Now, John Maynard Keynes is one of the most famous economists that has ever lived. And of course, you know the idea of Keynesian economics, which is, as my economics professor used to say in college, I remember him saying this. He talked about how Keynes was all about priming the pump, right? If you have a well and you want to get the water out of it, the pump, if it's dry, it won't work, or at least it won't work very well. You'll keep pumping and pumping and pumping, and no water will come out. But if you prime the pump and you put some water in the pump, then it will start to work. And that's the idea of Keynesian economics, right? During times of economic despair, the government primes the pump. Now, I don't think that that is always untrue, by the way. Keynes is right sometimes. The problem is the government always goes overboard, don't they? They always go overboard, and they succumb to special interests and all of the pork barrel legislation that the government is famous for. Why we did not get what our late President Ronald Reagan wanted, a line item veto, is beyond me. But look, we have what we have. It's the way it is. And that's the reality. So the Tax Foundation, which, by the way, has a great website, I recommend it, says that here is the economic impact that they believe will occur of the Inflation Reduction Act. They think it will actually increase revenue by just over $300 billion, which, by the way, in government terms, in terms of federal budget, that is irrelevant. It's almost meaningless. But the long-term impact on gross domestic product, on the size of the economy, will be a decline in GDP of 0.2% and a decline in wages. Now, unfortunately, I wish I could tell you if this was real wages adjusted for inflation or just nominal wages. I do not know what they're saying there. So either way, if it's real wages, then the wage decline will be down 0.1%. But if it's nominal wages, down 0.1% too. So if it's in real terms, this will be dramatically worse than the nominal terms. So either way, it's bad news. right? Either way, it's bad news. And jobs will decline. We'll see a decline in jobs as well by 29,000 jobs. Okay. So that's their estimation of the impact. I just think that the folks out there who believe that they can defy gravity, defy the law of supply and demand. Remember, as I've told you so many times over the years, I'm sure you're sick of hearing me say it, money or currency, just like anything else, is nothing more than a commodity. It's just like gold or salt or oil or orange juice or lumber or anything else in the world, any other commodity. Look, currency is just a commodity. That's all it is. And guess what? All commodities are subject to this fundamental law of economics. And that law is supply and demand. Now, I take that a step further because, as I've said so many times, anything in the world, anything at all, anything, right, derives value from two things, two value-driving components: scarcity, right? So if currency, like the US dollar or the yen or the euro or the peso, whatever, right? If there's more supply of this currency, it will become less valuable. If there is less supply of it, it will become more valuable, right? But the second part of that equation, it's not just supply and demand, it's function, it's utility. So scarcity and utility, the two primary value drivers of anything at all. And I even make this comparison. It's true with people, right? People are a commodity in some sense, right? So your loved ones, right? They are so valuable to you because they are scarce, right? There's only one of them, right? There's only one of each of them, right? They're super valuable because of their limited supply, right? I remember my pastor at Mariners Church years ago telling this joke about, and it was really quite poignant. You know, he talks about the person with $5 million always wants more money, right? But the person with 5 kids, they got enough kids, so there's a certain point of contentment, right? There in terms of the supply of anything, right? Anyway, that's the impact of the Inflation Reduction Act, according to the Tax Foundation. It'll be interesting to see how it plays out. Like all these government programs, it's in essence not going to work. It's going to kick the can down the road. That's all they ever do is kick the can down the road. Look, if you want something to work, you got to have fundamental economics in play. That's the only thing that actually works in real life. Okay, before we get into some more good stuff for today, I want to remind our Empowered Investor Pro members, we've got the next 2 upcoming events here are our 1031 exchange event. We're going to talk about tax-deferred exchanges with one of our experts. She will be joining us on Zoom this week on Wednesday, and she will be going into the details. You can get all of your questions answered directly. We are bringing the experts to you so you can interact with them, engage with them in an intimate environment. Not too many people on these meetings, so you can get your questions answered. There's always time to get your questions answered. If you are not an Empowered Investor Pro member, go check out empoweredinvestor.com and join us. We'd love to have you in our group. And then our regular monthly Zoom meeting is on Tuesday the 6th. So that's coming up as well. Those are the next 2 Empowered Investor Pro meetings. All right, let's talk about the most important thing. Remember, we just talked about supply and demand, how something becomes valuable or valueless, and it is scarcity and utility, right? So let's look at inventory from our friends at Altos. The latest inventory stats, inventory has been rising, and it has risen even more last week. But again, compared to what? That's always the question. Compared to what? And compared to what? Inventory is still very low. So 544,000 units essentially for sale in the United States, 544,000 housing units. Last week, we were at about 525,000 units. At the beginning of the year, we were at 293,000 units, if my memory serves me correctly. So we are seeing that inventory is most definitely increasing, but the pace of increase has slowed quite dramatically. So we are not seeing big increases in inventory. So the speed at which inventory is increasing is slowing down. So it begs the question, how will we end the year, right? How much inventory are we going to see this year overall, right? Is there going to be a big crash like some are hoping for and waiting for and trying to invest for? Well, one of my very knowledgeable friends this morning just posted this on Facebook. Now, I don't have it to show you if you're watching the video, by the way. And also, I love your comments. So if you are watching on video, please comment below. I know you can't do that on the podcast, kind of a different medium, obviously, in the way it works, but we always love your comments. We really try to read them all and respond to many of them. So please comment below. What do you think about the Inflation Reduction Act? Is it a sham? Is it going to work? Or are you for it? Do you think it's a good thing? I mean, look at immediately the immediate effect, back to that just for a moment, is, it's going to bring down some prices of prescription drugs and so forth, which are a complete ripoff in the United States. But the pharmaceutical industrial complex will be the subject of another show. So we'll leave that out this time. But here's what my very knowledgeable friend posted on Facebook this morning. It said, right now, in regards to housing, demand is absolutely crushing supply. Demand is crushing supply. And he's right about this, by the way. Lots of people are expecting a 2008-like collapse, but I believe they are going to be disappointed. The inflation stranglehold won't be letting up anytime soon. I can't imagine procrastinating right now and staying on the sidelines. Get your money to work for you. And he posted a really good graph of housing prices that shows that even since interest rates have gone up and housing has become more expensive on a monthly basis, prices are still climbing. They're climbing quite quickly, right? Because we need inventory to be double to triple this amount just to be at a normal market, depending on who you ask, right? So we need double to triple the inventory, an increase of 100%, 200%, even 300% inventory just to get to a stable market. So we are way undersupplied in inventory now, but where are we going? That is the question. Where are we going? Well, let's take a look. Our friends at Altos have a prediction, and they're saying that by the end of the year, we are going to end with inventory lower than we have now by a small amount, a little bit lower than we have today, okay? At 535,000 homes for sale. But they do think that by October, inventory will actually have increased a little bit. And again, it's not a huge difference, but to 613,000, that will be the maximum for the entire year. Again, this is a projection. And always note that in this part of the year, we have an important name. July, August, September, October, November spells Jason. I remember I was looking at a calendar one day in a chart on one of these news stations. I don't know, maybe it was CNBC, and I noticed my name in the year. And I thought, oh, wow, I never noticed that before. It's got my name right there in the year. So yeah, that's the time that they say we will see the highest point of inventory this year will be at the end of my name, the O and the N. So October, November, we'll see how it goes. But again, compare this to prior years. I mean, inventory is super low. Now, at the end of last year, we ended with 310,000 units. So we're going to be higher than that at the end of this year. But look at what it was in 2018 and 2016 and 2017, right? We peaked out in 2016, the peak inventory level was almost 1.1 million units, more than double what they are projecting we will end this year with. So again, if you're waiting for some sort of big crash, I just don't think it's going to happen. Now, again, there's a lot of uncertainty in the world. We've talked about that before. Won't go into today, but the housing market still has a significant inventory shortage. All right, existing home sales, median sales price. Here's a chart for you, $416,000. Now, why does this vary? Because, of course, it depends who you talk to and what study you're looking at. Are they looking at resale homes, new homes? They're looking at the combination of the two, right? It always depends. So again, the only thing I say to you is when you're looking at statistics, use a consistent measuring stick. That's all you need to do. Whatever you're looking at, just be consistent about it, right? Now, this is interesting too. Over the last 12 months, real estate has outperformed gold, cryptocurrencies, and the S&P 500, making real estate investing more relevant than ever. But getting into real estate can be intimidating, right? This is an article that I clipped this chart from. But of course, that's what we do. We help make it easy for you to execute a nationwide plan and help you buy properties in these good, sensible, linear, and hybrid markets around the country. Reach out. Our investment counselors are here to help. Go to jasonhartman.com. If you're in the United States, pick up your phone and call 1-800-HARTMAN, and we are here for you. Now, one of the things is interesting about this chart, by the way. It shows real estate being up 23%. It shows gold being down 9%. It shows the S&P being down 12%. It shows Bitcoin being down 51%. Ouch. And it shows Ethereum, the other big cryptocurrency, the number 2 cryptocurrency, being down 54%. But what it doesn't show you is maybe the most important thing. What it doesn't show you is that income property, this is talking about real estate, not the same thing as income property. It doesn't show you that income property is a multidimensional asset class. So for income property investors, their return on investment, if they did it right, if they're one of our clients, if they did it right, they significantly outpaced this return on investment number. They significantly outpaced it because 23% in this number is just the appreciation. And of course, you earn your return on investment from many other things. You earn it from mortgage pay down, where your tenants are paying down the principal balance of your mortgage. You earn it from leverage, because remember, the bank is your partner. OPM, other people's money. You're earning significant returns that way. You're getting tax benefits. You're getting all of these great things. And the one that nobody talks about, except really us, and that is my trademark term, inflation-induced debt destruction, IIDD, inflation-induced debt destruction, the hidden wealth creator in real estate. That concept is really only from yours truly, and you know who else? The huge real estate mogul, billionaire, Sam Zell, who owns the REITs, the Equity Office and Equity Residential REITs. Sam Zell talked about this many, many years ago, just as I was talking about it at the same time. Inflation-induced debt destruction. Of course, he doesn't call it that, but he talks about the principle of this. So, hey, don't rely on me. Just go look up some Sam Zell articles or videos online, and you can see Sam Zell talking about this exact thing, inflation-induced debt destruction, in essence, right? Now, here's a quote I love from Winston Churchill. The truth is incontrovertible. Malice may attack it. Ignorance may deride it. But in the end, there it is, the truth, right? And that's the thing. We always have to see through the fog. Remember that movie, The Fog of War? Or, well, that wasn't the name of the movie. It was, I don't know, maybe that was the name of the movie. I can't remember. Anyway, whatever. But that's a concept, right? When you're in a battle, it's hard to see the big picture. And when you're in changing economic times, it's hard to see the big picture. Anything in life, there's always a fog, right? And what we've always got to do is step back, look at the big picture, think long term, and kind of get our bearings, get rid of our sea legs, if you will. If you're a sailor, I used to sail all the time. After a day of sailing out on the ocean, this isn't so true on power boats as much as it is sailboats, because you're really rocking and rolling. And, you have sea legs. When you first get into the dock and you get off the boat, you're kind of like, wow, you're not oriented. You have your sea legs, right? And that's sort of a fog of war kind of similar concept, right? So when you get your feet under you and you get stable and you back up and you see the big picture, right? The truth, there it is. Income property is the most historically proven asset class in the entire world. There is simply no competitor so far to income property. There may be one someday, but income property is the greatest thing. Now, BlackRock, the huge giant BlackRock, explains that we should be looking at real estate. That is, current rates minus inflation, and high real estate rates can be positive for stock prices. Our interest rates are still negative when you account for inflation. In other words, we have negative interest rates compared to inflation and supremely negative interest rates compared to real inflation, not CPI or government or the official inflation rate. But as long as the Federal Reserve slowly and effectively communicates its intentions and calms investor sentiment, rising rates shouldn't be a complete disaster. This excellent analysis from market sentiment shows how federal rates have affected the market historically. So they're, of course, mostly talking about the stock market. But the reason I wanted to share this with you is because it's so true in the real estate market. I mean, look, high interest rates and inflation are very bad for stocks. We all know that. But they are good for real estate, and especially good for income producing real estate. I put income property in a separate category from real estate, in quotes, right? Real estate is a subset of income property. Income property is the broader thing that produces return in a multi-dimensional way. So when you hear people talk about real estate, remember, they're usually not talking about income property, which is better than real estate, okay? Like that chart I just showed you, showing 23% increase. They were only talking about one dimension of real estate. They weren't talking about multiple dimensions of income property. Hope that makes sense. All right, just wanted to make a quick mention because it's interesting. There is a lot of market manipulation going on. When big business runs the show, when there's a concentration of power in anything, whether it be political or business power, it is problematic. The Federal Trade Commission announced last Monday that it is fining Opendoor. Now, the actual company is Opendoor Labs Inc. for its deceptive trade practices. The Federal Trade Commission, the FTC, alleges that the Eric Wu-led iBuyer, Opendoor is an iBuyer, right? That they're one of these companies, like Zillow has an iBuyer division, Redfin, Keller Williams, like everybody's getting into the game of being an iBuyer, okay? That they pitched its services to potential home sellers using misleading and deceptive information that led sellers to believe that they could make more money selling their home to Opendoor than on the open market using the traditional home sale process. In reality, according to the FTC, most people who said or who sold to Opendoor made thousands of dollars less than they would have made selling their homes using the traditional process. Quote, Opendoor promised to revolutionize the real estate market, but built its business using old-fashioned deception about how much consumers could earn from selling their homes on the platform. Samuel Levine, the director of the FTC's Bureau of Consumer Protection, said in a statement, quote, "There's nothing innovative about cheating consumers," unquote. So, I'm sure Opendoor disagrees with the assessment, right? But the point is, and the reason I wanted to share this with you, is that these iBuyers, especially Zillow, now that they're getting back into the game, right, through their affiliations, but they are being accused of a whole bunch more manipulation and deception than this particular fine is talking about. And I'm going to talk to you much more about that on future episodes, because this is really important to understand how people believe that they are manipulating the market by suppressing prices and then increasing prices and doing all sorts of pump and dump accusations and market timing because of their significant buying power, right? That's the accusation here. So anyway, that's it for today's show. Got to wrap up. If you're part of the Empowered Investor Pro membership, we will see you on Zoom on Wednesday as we talk about one of the fantastic tax benefits of income property, the most tax-favored asset class in America. We're going to talk about 1031 tax-deferred exchanges. I did several of them last year. I've done one of them this year. Fantastic, fantastic thing. Remember, with income property, you get to reinvest your pre-tax profits. It's a beautiful, beautiful thing. Yes, it is. So if you're not a member of Empowered Investor Pro, reach out to one of our investment counselors. They can help you, or go to empoweredinvestor.com or jasonhartman.com, either one, and we can help you become a member so you can join us for these frequent Zoom meetings. You can interact with me directly, you can interact with our team, and you can interact with all of the experts that we bring on to the Empowered Investor Pro platform. Anyway, until 2 days from today, happy investing to all of you, and we will talk to you soon.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.